Hey, it's Phil Ratcliffe with Rebel Financial, and thanks for joining in to our live broadcast. Today, we're here with Gary Zimmerman with MaxMyInterest, and we're going to talk about an important part of people's financial management, cash management, and I think they just throw it off to the side. So this is going to be awesome. You should pay attention and take some notes. So, Gary, thanks so much for being here today and talking
Thank
with
you for
us.
having me, Phil.
Absolutely. So, Max is not a bank, but you help people. Uh, Earn interest from banks. So just explain to kind of our viewers and everybody watching, what you guys actually are and how you help people.
Sure. Thank you, Phil. So Max is really a service. As you point out, it's not a bank, it's not a financial institution, it's not a custodian, but it's a service that helps people more intelligently manage the cash that sits in their own bank accounts. And it really grew out of my own experience during the financial crisis. I was working at one of the big four banks, and the bank began to teeter. And I became concerned that all of my cash that was above the FDIC limit might be exposed in the event that the bank failed. And so I was
Yeah,
simply looking for a better way to keep cash safe. And in doing so, I stumbled upon the opportunity to earn higher yields through online banks. And Max is
interesting.
basically an implementation of that strategy, but scaled so that it can be used by thousands of Americans and their advisors across the
Yeah, that's
country.
awesome. I think when I think about you guys and your name, right, I would think that the story would be motivated by earning higher interest, but the motivation was actually like, how do I protect myself? That actually got you thinking about it.
Yeah, it was actually really about protection because if you think about cash, right, cash is all about safety and
Sure.
liquidity,
Yeah.
right? No one keeps cash to earn a really high return. It's just not going
Not
to,
these
or
days.
if it
Yeah.
does, it means you're in a period of super high inflation.
Right.
But you want cash to be there when you need it, right? Whether it's an emergency fund, whether it's giving you optionality, in a crisis like COVID, to be able to buy a second home somewhere if you have that flexibility, or to protect your family against things like job loss or changes in career. It's really
Right.
option value.
Right.
And so it's got to be safe and it's got to be liquid. And when I looked around at other solutions, there were material failures
For
in
sure.
terms of safety and liquidity. And so Max is really simple. It's just your own money sitting in your own bank accounts. What our software does is it automatically manages those bank accounts so that whichever bank is willing to pay you the highest rate gets your money.
That's awesome. Because I think, if you're any kind of savvy, and I think that was the solution before, you had to be kind of a DIY person to go do research and move money and have different accounts. And then where the failing even at that is once you do that, how motivated or coordinated are people to go back and keep rechecking? Right. And so then you just leave it there, and then they gave you a good rate at some point, and then you come back and look at it's like one fourth what it was before, and you're just like, I haven't been getting a good deal. Right.
Well, yeah, I mean, and that's the mistake a lot of people make, and it's an innocent mistake, but they think of picking a bank as a one-time purchase,
Yeah.
right?
Yep, I think
It's
so.
it's um,
And I'm
it's
gonna
sort of
make a
akin,
relationship with them, right? And they're gonna treat me right, right?
right? And the reality is, it's a competitive market,
Yeah.
right? And it's a free market, and it should be a free market. And so, um, I guess one way to think about it, the best analogy I can think of is when you go to buy an airline ticket, right? And you go to
Hmm.
one of the major online travel agencies, it could be Orbitz or Travelocity or any of those. And you go there and you say, I want to fly from Chicago to LA.
Hmm.
And they show you, all right, here are all the different airlines and here are the prices, and you pick your flight. But what happens if between now and the time of your flight, the prices change?
Right.
Well, you're stuck, right?
Yeah.
And that's how
Yeah.
a
Yeah.
lot of people think about their bank accounts. What we did with Max is said, well, let's not make a single point in time decision. Let's continuously optimize that.
Yeah.
So if you go back to the flight analogy, if now a lower fare becomes available on exactly the same itinerary 3 weeks later, let me just switch to that airline. And then if my original airline lowers the price again, let me switch back. And so that's what we do for bank accounts. It's sort of a more intelligent form of optimization. And so we hear a lot of people say, oh, I am smart, I use online banks, and they pick a bank and then that bank drops their rate.
Right.
And our view is you don't need to be beholden to a single banking relationship. You can have multiple relationships in a way
And
that,
you
that
know
benefit
what? I
you.
mean, fair is fair, right? I mean, most of the banks and what's so are publicly traded companies, and they're maximizing their profits, and some of that has to do with how they're changing rates or what's so. So why can't we, as consumers or bankers, maximize our interest?
Hmm.
like with some kind of tool or technology like yours, so quid pro quo,
Yeah,
right?
and that's exactly how it started. So it started with a focus on safety, right? How do I make sure everything is FDIC insured by parceling it out across multiple banks?
Hmm.
And then I began actively managing those accounts. And as you described, I actually did it manually for 3.5 years. Colossal waste of my time.
Yes.
Um, and I was about to stop because I said, gosh, this is just taking up too much of my time. But I looked back and I had picked up about 40K of incremental risk-free return. And I thought, well, wait a minute, this is the elusive alpha that everyone's always
Right.
looking for.
Right.
And so I started to dig into the market. And what I found were that if you looked at the top 4% of US households, which is basically any household with a million or more of investable assets, on average, they keep about a quarter of their assets in cash, so a
Hmm.
minimum quarter of a million. And those households collectively were holding $4 trillion in cash,
Wow.
just sitting in bank accounts and money market funds. And so I thought, well, gee, if I could automate what I'm doing, A, I wouldn't have to spend my weekends, shuffling funds around from bank to bank. But B, a lot more people could benefit from this same strategy. And so that's what we did is we said, let's figure out how to leverage technology to fully automate this so that you could set it up once and then never think about it again.
For
And
sure.
our software would automatically monitor
Unless a
rates
connection
and
breaks or
reallocate.
something. Yeah. So like that's it's interesting you say that because I'd say the main thing that motivates my clients when I tell them about this is just giving them some kind of practical example. I'm like, you keep $50,000 in there. If you just made 1% more on that, then this is how much money you would have. Like that's this many nights out eating, or that's this much of a vacation, depending on how much they keep. And then they're just like, oh my God, you're right. I'm just giving that money to the bank. And then that's exactly what you're doing. And it motivates them. They're like, well, how long is it going to take me to do this? And I don't like technology. I'm like, it's going to take you probably an hour, like max. And so if you're going to make like $1,000, is your time worth $1,000 an hour? I think so. You know? And so, like, at that point, sometimes, because that's the harder thing, I think, with some of my older clients, like, they're just like, well, I don't want to open multiple accounts and, like, have to, set some settings up online. And I'm just like, it's not that hard. And they got tutorials. You could figure it out. And the main thing is, it's like it's worth it. It's not like something that your kid's trying to get you to do that is some kind of amorphous thing that you may spend 10 hours and be totally frustrated and get nothing out of it. Like you're absolutely going to get like money back from this, right?
Yeah, and it's interesting because early on people said to us, well, this is a complete no-brainer. What's the catch?
Yeah,
Right? There's got to be a catch. And I said, well, the catch is that you've got to, take the time to set up the accounts up front.
right.
And so there's little investment in time and then it pays dividends in perpetuity. And that got us thinking, well, what if we could eliminate that setup friction? What if we could make it really seamless?
Right.
And so we began investing in
Yeah.
developing a faster and easier way to open new bank accounts.
Yeah.
And we created something called the Max Common application. We just got our first patent on it last December.
Awesome.
Um, and actually, last night, our team was really excited because we won a wealthmanagement.com award for best cash optimization solution. And it was based on this common application.
Congrats.
So
That's awesome.
what we did is we developed direct connectivity, directly into the banking cores of
Hmm.
banks on our platform. And we made it so that the client could fill out a single form, or even the advisor could fill out that single form on behalf of the client. And in less than 60 seconds, they could open multiple bank accounts. No logins, no passwords, no trial deposits, just really simple.
No trial deposits now. I guess it's
No
been a
trial
while since
deposits.
I've done mine, and that was probably the thing that I hate the most,
That
was the
was the
trial
big friction.
deposits. Yeah.
So super simple, everything is automatically linked. And then last fall, we went a step further and said, well, let's create, if we can create the best savings in the country, let's try to create the best checking account in the country as well. And so we partnered with one of our banks and we created a no minimum, no fee, high yielding checking account that includes free ATM access anywhere in the world, free wire transfers, both domestic
Wow.
and international. And it also opens in less than 60 seconds. And all of this automatically links together.
And that's the integration that lets you kind of break free from having to have, the banks that you say you can use Chase, you can use USAA, you can use Bank of America, which you could still do with the direct integration with them. But if you use Euro's kind of omnibus checking account now, then you don't necessarily have to have that overt
That's
integration
right.
partner,
That's
right?
right. It can,
Yeah.
it can now link into pretty much any bank or credit union or financial institution in the
That's awesome.
country. And in fact, with this new construct, You could also fund that Max account by wire or ACH, and so you can push funds in or pull funds out. And so in doing so, you can now enroll for Max without ever sharing any logins or passwords.
You know,
And that's really important.
I never really understood why they charge so much for wire fees. I'm like kind of excited for when they get that super ACH up that's like supposed to be faster than wire, and hopefully that'll be free too, and then we won't even need wires anymore, right? I'm sure the Fed will use them for something,
Yeah, and
but
we're starting to see that. So we built
yeah.
our system for same-day ACH.
Hmm.
So we're starting to see a few banks experiment with that. But you're right. I mean, a wire transfer costs, a Fed wire costs 35 cents,
Yeah.
and most banks
Like why they
charge
charge you 25 or
$35,
35 or sometimes
right?
50, and then they try to charge you on both sides. It's like ludicrous, you know?
Right.
Anyway,
So what we did when we set up Max Checking is we said to our partner bank, we want to earn zero economics on this,
yeah,
right? No spread, no swipe fees, nothing, right? Our whole business is built around
to
transparency.
enable. Yeah,
And we just want the best solutions for our customers. So we don't need to make any money on checking. And that's what's enabled us to deliver just a better all around product.
cool. So how much money do you need, for, just for anybody listening, building up in your savings before you should probably think about like, hey, I need to optimize, like it's worth my time. What would you say that threshold is?
Well, we purposely built Max with no minimum balance
Hmm.
requirement. So it's open to anyone
Yeah.
and everyone. And that was important to us. From a
So for anybody that's
practical
tech
perspective,
savvy, just do it. Then you have it
yeah.
in place. But let's say for the people that aren't, and this is like a hassle, like what would you say is like just for them to see in their mind, what's the amount?
Yeah.
You know?
Well, most of our customers have somewhere between 50,000 and 5 million of cash. So that
Okay,
sort of core Max customer tends to
sure.
be sort of six to low seven figures in cash as part of a broader portfolio.
Hmm.
But we do have customers with 10K or 20K as well who are just building good savings habits.
Yeah,
And our software is not emotional, so it doesn't matter to us. Really, we wanted this to be available to anyone who wanted to use it.
yeah. I think as a financial planner, I start kind of pushing my clients on it when I see like their savings beyond their cash flow go above 20,000. I'm like, you need to consider this because I mean, even a couple $100 extra, at least that's a couple, that's a couple meals out or what. So, just do it and then you have it built in if we do have more or what so that needs to be parked or we build up later on.
Yeah, and every customer has a different threshold for what's meaningful to them. We've had customers write in to say that with the incremental interest they earned with Max, they were able to send their kid to summer camp, and so that's a wonderful
Yeah,
thing.
that is. Yeah, that's a good
Um,
story.
we've had other people who say that this funds their annual ski vacation. We had actually one client, actually it was an advisor who told us that he was headed into what he thought was going to be a tricky fee conversation with a client because he was having to raise fees for a whole host of reasons. And the client came back and said, no, you've made me an extra $10,000 this year by using Max, so I'm perfectly fine with the fee increase
Yeah, yeah, yeah.
because you're adding value. And so it means different things to different people. One way that we look at it is to say, look, if if a client has a quarter of their assets in cash and you help them pick up an extra 100 basis points,
Yeah,
that's the same as boosting the performance of their entire portfolio by 25 basis points. And
yeah,
it's pure alpha.
for
So
sure.
why not?
Yeah, people have asked me, just like you said, like, what's the catch? And I'm just like, well, they make money. They charge you 0.08% per year, but most of our clients waste 10 times that amount not optimizing or shopping. So it's a really good deal. So I think, like you said, like, what's the catch? Like, people want to know. It's like, yeah, they're going to make money and they've got a good company, but they're doing it by making a win-win scenario, and it's totally worth it.
Yeah.
So,
And
yep.
what was important to us was to be fully transparent. So, we don't cross sell other products. We don't earn, per customer fees or per deposit fees from
Hmm.
banks. We don't sell member information. I built this for me. I said, as a customer, what would I want? And what
Yeah.
I want is I want to pay a fee and I want to get a service and I want to know exactly what's going on
And
behind the
that's why you
scenes.
guys are good. And that's why, like, I think the best services are made on things like that. And then they get ruined when some big financial company wants to buy you or what so, because then they are going to change things to kind of make more money off of what they bought, right? So, knock on wood, that you guys stay how you are or get bought by USAA or something like that. That would still be altruistic, right?
Yeah, no, they're great. They're great.
I love them. Yeah, it's like when I think about my company. they've done and been so good to me throughout my life. Like a banking institution that like when you need something or you want something, like they do it for you. Like it's like most of the time when I need something from a bank, a regular bank or what, so they're like, well, no, that's too much risk right now. And it's like, and then when I don't want anything, they're sending me all this stuff like, here, borrow more money. I'm like, I don't want to borrow money and pay interest, you know? And so like, I want my clients to think about Rebel Financial like I think about USAA, and it sounds like you're building a similar type business where people like you could like they could trust you, you know, with the things that you do. They don't necessarily got to look into every due diligence thing, you know.
And that's why our focus has been on working with registered investment advisors who are fiduciaries,
Hmm.
right? Who are focused on what is in the best interest of my client. That's what energizes us each day when we
That's
see
awesome.
so many people devoting their time to really serving clients as opposed to just trying to sell clients products.
So even though you're not a banker, you're kind of on the banking interest side of things, and I bet you're one of the only people in history on the banking side of things that says we would rather be more like a fiduciary. I think they spend a ton of time and money lobbying against against anything like that happening. Okay, so why do most banks pay such a low interest rate generally?
Well, I think they can.
Yeah.
Right? It's a market force. And it's interesting because in the early days of Max, people said to us, well, who are your biggest competitors? Which is an interesting question. And I said, well, I think it's really awareness, inertia, and apathy,
Hmm.
right? And someone said, oh, is it apathy.com? I said, no, no. I mean, think of it this way, right? So first of all, most people aren't aware that higher yields are available. They
Hmm.
just sort of, they're price takers. They take what they're given.
Yeah.
I have a bank account, another bank, and just got the statement, and they're paying me a tenth of a basis point in interest,
It's like why
right?
even pay anything at that
It's
point, you know?
right.
Yeah.
Literally not worth the ink on the paper. And a lot of people just sort of assume that banks pay nothing. And when I
That's what
started
it
talking
is.
to my
Yeah.
colleagues at my former bank about just sort of some ideas I had early on, and I asked them what they were earning on cash, and they just sort of shrugged their shoulders and said, oh, I don't know, nothing. And they sort of took that. And I said, well, wait a minute. You're such an active participant in every other aspect of your life.
Yeah.
I mean, I know these people, they're maniacal about everything. And yet, just to be a complete price taker on the interest in their bank account. So I think the first of it is just lack of awareness that there are higher yields. And now, as more online banks emerge and they're doing more marketing, people are starting to become aware. The second is apathy, which says, okay, I know I could be earning more, but I just don't care.
Yeah.
Right? Now, that's an interesting statement, right? I mean, people are focused on the fees that they're paying on their mutual fund. If I had one S&P 500 index that were charging me 16 basis points in fees and another that were charging me 8 basis points in fees, I'd pick the lower fee one every time,
Sure.
right?
Yeah.
Um, but for whatever reason, people have been conditioned not to care about cash. And they just assume it's a zero return asset class when it really isn't.
Sure.
And then
Absolutely.
the third is inertia. And this is really where advisors can be most helpful because earning more on your cash is never the highest thing on your to-do list, right?
Yeah.
There are so many more pressing priorities in life.
Yep.
And so it's a really easy thing to defer and say, oh, I'll get around to it next week. I'll get around to it next month. I'll get around to it next year. And then we have people who join Max and they come back to us and they say, well, why didn't I do this a year ago? And I said, because life happens, because you have other things going on in your life that are more important. But this is one of these things where if you're going to do it at some point, you might as well start now because the sooner you start, the sooner you start earning more
For
on your
sure.
cash. And that incremental return is meaningful. It can, you can donate it to charity. In fact, we've built in the ability within the site to donate to charity if you want to. You can pay for your kid's soccer camp. You can save for college. You can do any of the things that you're working with your advisor to help plan for.
And it's
But if
important.
you
Yeah.
don't do
The more cash
something,
you have, I think
yeah,
the
and if
more
you
important it
don't do
is. Yeah.
something, you're just giving it back to your bank.
Yep, I agree. That is exactly. So walk us through. Maybe we could screen share for a second and show us a little bit about what you guys do, the process. You know how easy it is because I think you're right. I think for people that are less savvy, um, there is that they got to get the momentum to go, right? And then I mean, I don't even think it was that hard when I did it when the process was like 3 times harder. Now it seems like you guys have made it a lot better.
Yeah, well, we've definitely made it simpler, and we continue to work to make it even faster and even easier. Um, So this is Max, very friendly website. And the way that Max works is really simple, which is we started with the premise that you have an existing relationship with your bank and you're probably not going to switch banks.
Yeah.
That's a very sticky relationship. And so Max is built around you. It's built around your existing banking relationship.
Hmm.
So you might have an account at one of the big banks. You might have it at USA. You might have it at, it could be at a brokerage firm. It doesn't really matter. And then what we do is we help you open a number of higher yielding online savings accounts.
Okay.
And the online banks are able to pay higher interest for the same reason that an online retailer can sell you a Lego kit for a lower price, right? They don't have to pay for brick and mortar, and because of that, they have lower operating costs and they can pay higher yield on the same deposit. And then what Max does is it links all of these accounts together. So all of your new online savings accounts are linked back to your primary checking account.
Okay.
And you just tell Max how much money to keep in checking, and then everything above that will flow to savings where you can earn more. So we'll look at a tangible example of this. This is a demo account. This is not my money, unfortunately, but this is actually a fairly typical Max customer. And you'll see that this customer's primary relationship is with Wells Fargo, and they've told us to keep $25,000 at Wells. So what that means is if their balance at Wells goes above $25,000, we'll automatically sweep the excess to savings where it can earn more.
Okay.
And if they dip below $25,000, we'll automatically pull funds back to replenish so that the customer knows that they have enough money in their bank account.
Okay, awesome.
We have other clients who choose, instead of using, let's say, Wells, they might use Max Checking as this sort of special purpose checking account. And then you're making more of a deliberate allocation of cash into Max. But it can work either way.
Sure.
And then below are listed all of the higher yielding online savings banks that are supported on the Max platform. And what we do is we force rank the banks by interest rate every day from highest to lowest.
Mm-hmm.
So, and basically highest rate wins. So what we'll do is we'll take all of the dollars above this target balance. So in this case, the client has an extra $661,000 of cash, and we'll allocate it in a rate prioritized waterfall. So the highest yielding bank gets the first 250K. The next highest yielding bank gets the next 250K. Any residual above that goes to the third highest yielding bank, and then we just keep $1 in the other accounts to keep them open.
And they can pick their own rules on that, right? In terms of
yeah, totally customizable. So I can go into the settings and I could say, look, I already have a $100,000 CD at Amex, so only keep 150 there, and then Max will automatically reallocate.
Gotcha. And I see up there it says the coverage strategy. So if someone was married versus individual and you had different titled accounts, then you could layer more on there, or what so?
Exactly. Joints, trusts. So for instance, if these were jointly titled, now I can keep more money in each bank.
Okay.
And so it'll be able to reallocate this money from Marcus into these higher yielding banks. So if I were to tell Max to reoptimize, you'll see how it will automatically move money and reallocate.
Awesome. Yeah, that's cool.
And so that's how Max works. And it's really simple. And you can track the status of all of the funds transfers, so you can see the different colors represent different banks. But as the rates have changed, it reallocates automatically, and it's on autopilot, so you don't have to do anything.
That's really nice. Man, that's a lot of them now. I remember when I started with you, I think it was 4 or 5, and now, what are you up to now? Like 8 or 9 or what so?
Yeah, well, we've got actually in a couple of weeks' time, we've got another bank joining the platform, and then in October, we'll have another bank joining the platform, and each new bank that joins will be on the common application, which means that you can open a new bank account.
So you only let them join now if they're going to join the nice, easy process. They got to put in the work to make sure everything's going to work conveniently for the clients. So
exactly, and that's nice because there are no logins, no passwords, nothing can ever become unlinked. And the banks on our common application also offer our customers preferential terms, so higher transfer limits. Sometimes they even offer preferential rates that aren't available anywhere else. So as we build out that network, it just gets better and better for customers.
That's awesome. I have a kind of a little off-track question that I'm interested in, and I run into this lots of times, and I never really understood why the market is why it is, and I haven't gotten a good answer out of anybody. But it's I know you have a commercial partner for businesses that want to earn higher interest, and I get that question a lot. And there's a decent amount, and businesses, they just get like 1/3 the rate almost that people can get individually. And it seems to me that since they keep more cash, a lot of them are very predictable. Like, why is it that they can't? And do you guys have any plans in the future to maybe, help resolve that kind of anomaly. I mean, when I've talked to a commercial banker, they said, well, it's harder because they have to pay more and it's more relationship intensive. I'm like, somebody that's doing everything online or what, so that's not going to talk to you guys at all. There's no extra relationship stuff there. So, like, I don't understand. So, like, maybe you could help me
Yeah,
understand better that.
it is a quandary, and it's something that we faced ourselves, right? So we do have a parallel solution that we offer for business accounts, and we use it for our own company's cash
Mm-hmm.
for all the same reason, which is that if you're holding on cash, it needs to be liquid and it needs to be insured.
Yeah.
And businesses are subject to the same $250,000 FDIC insurance limit as individuals. So if you're a business, we actually, a lot of the same advisors who use Max for their clients also are looking for better solutions for their own
Yeah, for sure.
company's cash. Um, and so, yeah, it makes sense to spread it out across multiple banks for liquidity and safety, but also for yield. So you can do the same thing for business accounts. Um, in terms of why banks tend to pay lower rates to businesses, again, it's sort of what the market will bear.
Yeah.
Businesses are just accustomed to not really earning much of anything.
Do you
There
think
are some,
that
yeah,
is like if some of your partner banks came out with some product like that, I bet eventually within a couple years as people started to hear about that, I think business owners are more savvy than even individuals are. There could be a mass exodus of cash from a lot of those traditional banks to something like this. I mean, what do you think about that? I mean, obviously you got your finger on the pulse a lot more of that industry.
yeah. I mean, I think that certainly businesses, every business has sort of a CFO or a treasurer or someone who's responsible
Mm-hmm.
for managing the finances. So unlike a household where it's really easy to get caught up in the business of life and not focus on every detail,
Right,
businesses ought to be more focused on that.
for
I
sure.
think there is some element that's true where business banking is more relationship driven in the sense that businesses are reliant on their banks for lending, and often the banks will say, well, you really need to keep all of your relationship with us so that we can give you preferential treatment when it comes time to lend. How much of that is true or not
Right.
is probably up for debate. So there are some stickier hooks there, whereas retail banking is pretty commodified at this point. It's no longer the case that when you walk into your local bank branch and ask for a mortgage, they know you personally and are going to hold the mortgage on your books. What they're going to do is send you a website to upload documents and fill out forms.
Right. And then they're going to sell
So,
your mortgage in like 2 weeks.
yeah. So, as it relates to business accounts, really the only thing that's more complicated for a bank is that the sort of onboarding and KYC process is a little more involved. But we've actually been working with one of our banking partners to see if we could do the same thing that we do for individual accounts for businesses, and figured out how we can open a business account start to finish in about 3 minutes.
Wow, awesome.
Um,
And then
and
how much
so
would the rate of return be below like the personal savings rate, you think?
our goal would be to keep them on par,
Oh man, that would be
um,
awesome.
which would be a big improvement for businesses. So I
Yeah.
think there's some exciting opportunity there. On the retail front, for individual customers, the next bank that's joining our common application, I was able to open an account with them in 16 seconds.
Holy cow.
A joint account, 16 seconds. And if you
Wow.
think about everything that's going on behind the scenes to make that possible, meeting all the regulations that a bank needs to meet, it's pretty impressive. And so we're really excited about partnering with banks and helping them deliver a really delightful client experience. And in doing so, we're actually helping the banks um, take more costs out of the system. Because when we started, our focus was on the difference between brick and mortar banks and online banks.
Mm-hmm.
And the idea was that an online bank has a lower cost structure, and so they can pay a higher yield. But over the last few years, we started digging into the cost structure of the online banks themselves, and we realized that they were wasting an awful lot of money on customer acquisition. So whenever you buy any sort of product, if the vendor has to market to you, you're basically paying for that marketing,
Yes.
right? When I
Yeah.
buy a
It's
can of
expensive.
Coca-Cola, only a small portion of it is the sugar and the syrup and the
In
water,
the can.
right?
Yeah.
Most of it is actually the brand image that I'm paying for.
Yeah.
And, and so what we're doing with the common application now is we're saying, look, banks, you don't need to waste money on customer acquisition, right? We can find the customers. We know all these people who are looking for better offerings. And if we can strip that cost out of your cost structure, you can afford to pay even higher rates to our customers.
Yeah,
And
yeah,
that's what we're doing. And that's the really exciting part about it, is that you're not just managing the existing industry, you're improving the industry for the benefit of everyone. You're taking out cost and you're creating greater efficiency.
for sure. So, are there any kind of last, words of wisdom or advice that you would like to give everyone?
Um, you know, uh, we've really enjoyed spending time with so many financial advisors, and you really meet, the full range and full gamut of advisors. And it becomes very clear that there are some who are really focused on doing what's best for their client,
Right,
and there are others who are still in the old brokerage model of like, how do I sell product? Um, and what's been really heartening to me is the opportunity to meet so many advisors who really are, so personally dedicated to doing what's best for their client. And we've seen people, particularly during these difficult times during the COVID pandemic, of advisors really going out of their way to help the community, and to help their clients manage through this. And to me, that's been sort of one of the most personally rewarding parts of this, is seeing the goodness in people,
yeah,
and seeing how this industry is changing. And there are still a lot of broker dealers out there where the core of their business is earning spread on clients' cash. It's
for
actually
sure.
where they make the majority of their profit in
Yeah,
many cases, by paying subpar interest rates. And it really doesn't have to be that way. So anything we could do to spread awareness and education and get people thinking more critically about their finances and who's managing them, we think can really help people.
it is interesting to me because, I mentioned to you before we started this that there's like a whole thing on our National Association of Personal Financial Advisors where we were talking about this and which custodians pay good cash rates and which ones don't and why and how they're trying to raise fees. But another thing that I had talked to my kind of TD Ameritrade wholesaler, and he's kind of a little bit more open now because obviously they're getting bought by Schwab, and but he was telling me that how less profitable RIAs are as a like client, even though we bring tens to hundreds of millions, even in some cases billions of dollars to them, because we're so efficient for our clients in terms of our fund selection, in terms of our trade order discipline, in terms of keeping less cash in those types of things and getting it to people like you. And I'm just like, that is interesting. So even though we may be huge, we may be one fourth as profitable as their retail business, from where just consumers or investors are just making mistakes, or like you said, the apathy of just saying, I don't care, or what's, or there is an asymmetry of information.
Yeah, I mean, markets are all about efficiency, or in some cases, the other side of that is exploiting inefficiency. There are more than $15 trillion of bank deposits floating around right now, and
Wow.
the vast majority of those are under earning and underinsured. And so we see this as just a huge opportunity to help people in a very meaningful way. We estimate that U.S. households are missing out on something to the tune of $50 billion a year in interest income that's rightfully theirs. Interestingly, it's roughly equivalent to the profitability of the largest banks. Um, and so, anything, again, it's all about awareness. It's all about overcoming apathy and inertia, and taking little steps that can help materially improve your financial future.
For sure. I agree. I think you guys are doing great things. You've helped a lot of our clients. We appreciate that, as well as you coming on today, Gary, and explaining some things. And it seems like those awards that you guys are getting are well deserved.
Well, thank you, Phil. It's been a pleasure.
Well, you let us know how we can help anytime. We appreciate you being on here. For all of you guys watching, share your questions, comments. We'll try to answer them, or the staff over at Max will try to answer you, and start maxing your interest as well. So have a great weekend, and we will see you next week.